is the 20-day is 20 points away. So let's see if you're able to get to it. 18,010 or so is where the market is trading at. Jai Bala is with us, cashthechaos.com. Jai, good to have you with us here. We've been sort of lamenting about this range that the index has been in for most of this year so far. Third week now. What's your sense? Which way will we get a clean break and then a sort of definitive directional move? And by when? Your sense?
Yeah, thanks for having me on the show, Prashant. Yeah, my sense is that we're definitely going to have a directional break for the market, and that's most probably going to be on the downside. The markets went below the December low of 17,774 just by a few points, but that is a significant move. The market is driving an important message, and it's for technicians to read that. And right now, the market is seeing a counter trend bounce, and it's a very weak one. And I expect this counter trend bounce to push the market somewhere close to say 18,250, maybe even 18,400. But if the market for some reason falters before 18,140 and breaks 17,850, you need to be extremely cautious because the market has a probability of accelerating lower. If it does that I repeat that part alone. If market doesn't go above 18,140 and breaks 17,850 first, then the probability of market accelerating lower is pretty high.
Okay, hi Jay. If we break that 17,850, then where does the support come on the Nifty? If you could tell us on that index. And the Nifty bank has surprised everyone. When people are getting a little bit cautious, we have results that have come in, but putting everything into consideration, well, actually the Nifty IT index is higher. So your view on that space as well. Go ahead.
Yeah, see, Nifty Bank is weakening, but it's not yet broken down. And the 41,560 low that registered on December 27th, that's still it's holding up. So until that, the trend is still up, and we can see the sector has not yet broken down. But the most vulnerable pocket is the private sector banks, and particularly ICICI. And ICICI, it's going to, if it closes below 857 or 855, it's going to break the trend from the pandemic low. And it looks quite probable from looking at the price action of ICICI. And if the significant support for Nifty is at about 17,760, and below that it's about 17,500. And for the banking index, we have this December low as the first important support, and below that it's 4,800. And if ICICI were to break 855, I think the banking index will start to sink below those supports. And when it comes to the IT index, the IT index is very skewed towards Infosys. Infosys has a very large weight on the IT index. So if the IT index manages to wants to push above 30K, we want to see Infosys above 1597 and 1628. And so there is relative strength in HCL Tech, like I said last time, and persistent. But you need to focus on stocks even outside the components of the Nifty IT. If any IT stocks that were to take out the December highs, I think that has a great relative strength and probability of pushing much higher.
Right. No, got that. Jay, you have views on metals and a couple other things as well. I'll get to that in a bit. But just a quick word. You have a view on the dollar index as well. But my question is not about where the dollar will head, but the fact that even though the dollar index has corrected significantly, there is, what is the correlation? I mean, I'm sure you looked at it between, say, what the DXY does and maybe a measure of Asian equities or global equities. How should one read that, in your opinion?
See, when it comes to the currency in the Asian markets, the currencies are more correlated to the Asian dollar index. No, it's not published much unless you have a Bloomberg terminal. You won't be able to track that. But when it comes to the equity markets, the equity markets have rallied despite a very strong dollar index. So we can't say once the dollar index starts to weaken further, that'll reverse the equities rally. We are in a slightly dislocated market, but I can just say that the dollar index correction is coming very close to an end. And but we need to wait for confirmation from the market. We need to see the dollar index go above 105.8. Only then it will signal the correction's over. Before that, we don't need to get bullish on the dollar crosses.
105.8. You're saying that only if the dollar index crosses that, then it's likely to signal the correction is over and it'll start moving up. What about
Precisely,
crude?
and you might also want to look at the other crosses, Rima. You might want to look at USD JPY 138 level and Euro USD 1.048. Once USD JPY is above 138 and the Euro is below 1.048, that convincingly signals the dollar index is resuming its uptrend. So watch out for these markers.
For now, at least, we've seen a very strong yen appreciation, right? The yen to the dollar to yen was 150, and today it's at 128. So the yen has really appreciated against the dollar. Let's see what the Bank of Japan has to throw at us tomorrow. But Jay, thoughts on crude? We've seen the Brent crude price start inching up. Now it's closer to that $85 per barrel. Do you see it heading higher?
See, I thought the Brent variety has clocked a counter trend top at 87.1, but it's showing some amount of strength that it's showing some probability that 87.1 might get taken out. It's a low probability, but in the event that 87.1 gets taken out, it doesn't disturb the medium-term setup. I'm expecting Brent to drop to initially to 60 and later on to mid 40s. But from a very extreme short-term perspective, if 87.1 gets taken out, it might push somewhere close to 92, 93, and then the medium-term downtrend that I'm anticipating, it'll begin from somewhere from there. A higher height for the Brent to plunge is a good prospect, but I think it's already done the correction at 87.1.
Well, Jay, final question from my end then before we let you go. Last year India decoupled from the globe. But the mother market's going to be important, right? The direction out there. Any levels you're looking at, either on the S&P 500 or the NASDAQ?
See, the S&P futures has come to a very important resistance at about 40.34. It's slightly below that. That's important resistance for the S&P futures. And if the markets start turning lower today, that will be a signal that what we have seen so far is only a counter trend bounce. And if you look at the other indices in the US markets, like the NASDAQ, Russell, or the FANG, or the KBW banking index, none of them are showing strength. All of them are having the stamp of a counter trend bounce. So I believe, even if only the Dow is showing strength and it's just a steady stock index, even if you look at the Dow transportation, which is the foundation for technical analysis, where Dow and the Dow transports need to make high or lows together, that's not even happened. So, I think a turn is right around the corner for the US equity markets. Probably tonight's session will be pretty significant.
As we chat with you, Jay, we're above the 20-day average of 18,034 or so is the average. We're at about 18,044. Could this mean a little bit more in terms of gains here in this run before markets head lower? And where could we get to? Your quick view?
Yeah, as I said in the beginning, Prashant, I would like the markets to bounce somewhere close to 18,265 to 18,400. And if it does that, I think that'll be the maximum for the counter trend to rally. And then we can see the market start to resume in a harder downtrend fashion.
All right, fair enough. Thank you very much. I appreciate you joining in. 18,265 is basically the high on the 30th of December, the last day last year. And then, of course, from there, the market did take a bit of a dive. That was pretty much the high point in this cycle. We'll take a quick break here. Jai, thank you very much for joining us. So up a little bit, that momentum which Mitesh was talking about and saying it's missing, maybe it's starting to make a bit of comeback. 30 minutes to close. We'll take that break. We are back. We'll get you a quick check on what's happening in dealing rooms with Nimesh on D Street Chat.